5 of the most important things you need to know to make money in the stock market, coming up. Welcome, I am so glad you're here. Through this channel, it's my goal to help you build your rapidly growing, highly diversified net worth one video at a time. And if you'd like to use the stock market to help you get there, I think that's a great idea, by the way. This video is a great place for you to start. Of all the tips and facts that I could give you, and I will give you over time on this channel, I've pulled out 5 of what I think are the most important when you're getting started. These are 5 things, to be more precise, 2 facts, 2 tips, and 1 general but essential to comprehend observation. There are 5 things you must know before investing. Number 1, buy low and sell high. Now hold up, don't turn this off. I know that's super generic and I hate saying it because at this point it's so cliche that most people just gloss over the significance. But this isn't just something that you need to know. I'm sure you already know this. The reason it's important to keep top of mind is because although everyone knows this aphorism, almost no one adheres to it. That's why, according to the research that Dalbar does, the average investor consistently and dramatically underperforms the market every year, year after year. That's why more money flows into the stock market at its height. Like the peak of the dot-com bubble, right before the crash, that's when more money from everyday investors was pouring in. And sadly, that's why the opposite is also true. Statistically, more money is being pulled out of the market at its trough, the very bottom. The time that would actually be best to be pouring your money back in. More people are exiting at that point. So despite our awareness, on average, as a group, we're all buying high and selling low. So you can't afford to just gloss over this point. We could all be better. What you need to get out of this before you start, or as you try to get better at investing or trading, find ways ahead of time to make this happen, to make it where you can buy low and sell high. There is a lot to this, and I'll be helping you explore it and improve your ability here on this channel. But for example, this means don't just wait to see what happens or to see how you perform as you start putting money in stocks. It means taking some time to prepare yourself mentally before you take a position and understanding the extreme importance of that exercise. Most people don't want to do it, but it's really important for your success. Having rules in place before you trade as opposed to just winging it. The list goes on. Bottom line, you have to internalize the significance of buy low, sell high. Understand how difficult it actually is and take active measures to set yourself up for success. Again, if you want help with all that, just click the subscribe button, click the notification bell, and stay tuned because we're going to get you there. Number 2. You need to understand how taxes can affect your trading returns. The more you trade, the more likely it is that you'll run into a situation that you really should understand what happens from a tax perspective if you own a stock for more or less than 1 year. Sometimes this rule has no bearing on my trading decisions. Usually it doesn't. But the closer I am to that 1-year mark, the more important it becomes. The rule is relatively simple. Gains from stocks held for a year or more are taxed as long-term capital gains, which is fine, at least for now, and most of the time that rate is much lower than the alternative. Today, depending on your income tax bracket, it'd be somewhere between 0 and 20%. It's when you realize gains from the sale of a stock that you've held less than 1 year that you should really be concerned. At that point, the gains are taxed as ordinary income, which today could be almost 40%. That doesn't mean you should absolutely always hold your stocks for over 1 year. It's just something you should be aware of, especially if it's month 11 and you feel like it might be time to sell. Would it hurt you to stay put for another month? Maybe so. maybe not. It's also why when I do my research seeking 100% plus opportunities, I'm okay with the 1 to 2 year time horizon I mentioned in this video. I'm not really looking for quick wins. I'll take them if I get them, but partly due to the difference in taxation, it's harder to win long-term that way. Number 3, the price per share of a company's stock has no bearing on its actual value. This may be a basic review for you, but remember this is a video specifically for beginners to the stock market. So just stay tuned for the others if this is too simple. And when you are just getting started, this is not immediately obvious. Just because Amazon's share price is around $1,500 and Apple's share price is around $150, that doesn't mean Amazon as a company is worth 10 times more than Apple. No, in fact, as of this recording, Apple is worth about $150 billion more than Amazon. The second factor in a market value calculation is the number of shares outstanding. Multiply the price per share by the number of shares, and then you'll know the actual value of a company, or the value the market is assigning to the company, which is pretty important when you're trying to determine whether or not a company is undervalued. You need to understand how to calculate that market value, the market capitalization of a stock. Some companies like to split their stock into more shares as the price per share gets too high. For example, a $100 million company with a $100 share price and 1 million shares outstanding might decide to split all their shares in two, resulting in 2 million total shares now, each with a price of $50. The total value of the company is still $100 million. The total value of all the shares that you own is still the same. The only thing that changed is that you now have twice as many shares and they're all worth half as much. Walmart is a great example of this. They want their shares to be perceived as affordable, always low prices. That's what they're all about, right? So anytime the share price gets too high, they'll split to make it seem cheaper. Warren Buffett's company, Berkshire Hathaway, on the other hand, refuses to split its main shares. So today, they're each worth around $300,000. Number 4, if you want to be successful, you will have to learn to research. As we discuss in this video, if you aren't doing research yourself, at best, you're speculating. At worst, you're gambling. If you buy and sell stocks or some other investment vehicle, you should watch that video and see if you are indeed investing or if you're actually speculating. It's an important distinction that you should understand. And unfortunately, I believe most people are in fact speculating when they think they're investing. To be successful long-term in the stock market, you will need to learn to research. You'll need to learn what numbers and what metrics actually matter. You'll probably want to find some tools to help you with the research process. I made a video of my favorite 2 research tools right here. These are my secret weapons. Well, they were secret. Now you can just watch the video. You'll need to learn to review company financial statements. Boring, I know. Boring. But it's through these things that most people are actually not doing because it can be hard, because it can be boring. It's by doing those things that you can actually be successful. There is so much to learn about researching stocks, and I'll be honest with you, I've been doing this seriously for more than a decade, and I'm still learning. Through this channel, I will do my best to provide you with everything you need to achieve your stock selection goals. So if you're serious about this and you now understand the critical importance of research, then I hope you'll stick around. I'm building out a fundamental research playlist. You can get there by clicking on this card. If you're watching somewhere you can see those, just click the information eye at the top of the screen, or you'll find it linked out in the description below. I'm also putting together a stock research resource guide. All the tools I use in the discovery process, from blank slate to fully developed investment thesis. Depending on when you're watching this, that may or may not be done yet, but if a guide like that would help you, just go to stockresearchguide.com, where you can download it or get on the list to get it once it's done. And finally, number 5, if you want to be successful in the stock market, you're going to have to learn to tune out the noise.
There's one thing I hate, all the noise.
I'm not talking about your financial education. You should listen and read things that increase your knowledge and understanding of how things work and how to get better at trading. But you should tune out the financial news as entertainment genre. I'll admit, it can be hard to differentiate. And as I confess in this video, when I first started trading pretty much full time, I made a lot of mistakes because I couldn't recognize that difference. If you're interested in learning more about why this is so important and how to differentiate and how to actually successfully ignore it, I wrote a blog article that you might find interesting. I'll link to it in the description. Just look for the link. As with all of them, just look for the link by this timestamp. Or, as with almost all these subjects, we'll be exploring all those questions in more depth here on this channel. So just stay tuned. Now I want to hear from you. Let me know in the comments below which of these points would you like to explore in more depth. If you found this video helpful, leave a like, share it with your friends and family. If you're new here and you're interested in building a rapidly growing, highly diversified net worth, just click here to subscribe and then click the notification bell. That way you won't miss a thing. I've also created a where and how to start trading playlist just for you. You'll find it right here. I can't wait to see you again. Take care.